Welcome everybody, and thank you for joining us today. It's really a pleasure to invite you to Wesdome's first ever exploration teaching, something we're all extremely excited to share with you and tell you a little bit about. For most of you who know us, you'd know that Wesdome has had a strong track record of maintaining a 3 to 4 year mine life ahead of itself, and really had a focus on replacing its reserves year over year. That focus on annual reserve replacement didn't allow us really to take a long-term approach to the business. And over the last while, we've really considered how we revisit this and understand how we take a look at the asset holistically. 3 years ago, we changed everything. We decided we're going to reposition to prioritize long-term growth, organic growth, and drive the value of these operations through our mills. We've taken a systematic and a disciplined approach to exploration. We supported it with good investment, and at the same time, we ensured that technically we set these teams up to work well together and well within their own silos. There was a deliberate return to our roots as an exploration-driven company. I think for us, when we look at this company, we know that the biggest return on value to our shareholders has been in exploration, and we're going back to that today. With a debt-free balance sheet and very strong free cash flow, we have since more than tripled our exploration spend since 2023, and we've launched a very disciplined multi-year strategy which is focused on growing reserves and resources, and more importantly, on also making new discoveries. We also brought in new leadership. Jonah Lawrence joined us as our Senior Vice President of Exploration Resources in 2025. And since last January, Jonah has rebuilt his team, he's restructured his program from the ground up. He's gone back to basics and taken a really fresh lens on these assets. We now have a very clear 3 to 5 year plan. Year one was last year, very exciting year, the year we built our foundation, and we already saw great success. In fact, I didn't expect to see as much success as we saw. Jonah brings a proven track record with over 10 million ounces of discovery at Endeavour Mining, and before that at Randgold as well as Kibali. He's also built a team that matches the quality of our assets, a team that I'm truly proud of, and he'll tell you a little bit about them in a moment. Today, Jonah is going to take you through the geology. He's going to tell you how we target, how the program is structured, and what the pipeline looks like. And what you'll hear is not a vision, it's going to be evidence. You'll hear about what we found, you'll hear about what we're testing, and you'll hear about why we see upside. And the takeaway is simple. We want you to see the potential in Wesdome across our land packages, not only in high-grade growth, which is fundamental to who we are, but also in bulk tonnage opportunities and also new discoveries, which we're seeing. We want to set the stage for the sizzle. As for today's format, I think it's supposed to be very engaging. I want you all to know that you should ask questions at any time. And please stop us if you have any clarifications you need. We're all here to answer questions. We blocked out 2 hours for today, but we can stay as long as you need us to. And with that, I'll hand over to Jonah.
Thank you very much, Anthea. And good morning, everyone. Today's session, it's interactive. I encourage you to ask questions. You want to maximize what you take away today. I just ask that when you raise your question, please start with your first name so that we get a chance to know each other. I'm Jono. I'm a geologist. I specialise in exploration. 35 years ago, I came across a mantra whilst at university. That's a mantra that I've held dearly throughout my career. That mantra is turning ideas into gold bars. It's the cornerstone of all the teams that I've worked with. And you'll see in today's presentation that thinking, that philosophy, that guiding principle permeates through the slide and the work. My career has spanned 35 years, multiple countries, and I've always worked in areas of textbook geology. Why did I join Wesdome? The Abitibi and Wawa sub-provinces. That's the reason. They have a gold endowment of over 300 million ounces. That's over 9,000 tonnes. It's the equivalent and it's comparable to the endowment of the Birimian in West Africa, of the Yilgarn in Australia. I've worked in both those areas. It's time for Canada and the Abitibi. You might be wondering what excites me about my job. 3 things. I work with incredible people with a track record of success. I'm part of a company that has a vision for value creation and growth. We invest 4.2% of our revenue into exploration. That's pretty astounding. For a mid-cap, exploration is your research and development. It's in our industry. And I'm intrinsically motivated. As you know, the geology here is world-class. What I've seen in the past 12 months, an example is showcased in the core that we have on display here. It's incredible. It's simply incredible. We've got one drill meter here that's going over 6,000 grams per tonne. If you hadn't had a chance to see it, we've got some core from Dubuisson that shows some good grades. I invite you, please, have a look before you leave today. We have the right real estate. We have the right geology. We've got amazing grades. We've got fantastic exploration upside. And we have the team to carry this mantra and execute on our geology. Let me introduce our team. Brianne B. She's the former CEO of Angus Gold. She's a proven gold finder. Strong management skills. Excellent geologist. Hanan Lopez. Hanan is an absolute whiz kid on software. Absolute whiz. He brings industry best practice in modelling, resource estimation, geostatistics. Both of them are in the back of the room today, and they're available for questions later on. Bruno, our chief geologist at Kena, intimately involved in the discovery of Kena Deeps. He's been there for over 10 years, and he's been working with us for over 8. That knowledge of a mine with a complex geology and structural history, you can't replace that. Similar what we have at Eagle with Elfriede, our chief geologist there. She's been there for over 5 years, working through the mines, going through the paces, understanding our geology and the structure. At every stage of our work, exploration, modelling and resource, mining and geology, we have people with deep experience and track records of delivering and execution. These people, they de-risk the work processes that we have at our assets. Let's go to the next slide. This is our organogram, our structure. It's designed to provide cross-functional support at a corporate level and down to our site levels. Our teams have grown. 3 years ago, we operated at the bare minimum. We were lean. It was a different philosophy, different company, different budgets. Back then, 6,000 to 8,000 metres of core backlog in a month at the height of the drill season was considered normal. Can you imagine? You're drilling 8,000 metres and you're 8,000 metres behind. By the time that assay's come back and you're processing, it's 2 months later. How do you keep on top of things and keep your targeting and thinking going? We didn't have the capacity to change, but that has under Anthony's leadership. And what we've been able to do over the last 12 months, we've created extra positions. We brought in database managers, GIS people, structural geologists. We've got structurally controlled ore bodies. Kind of makes sense to have specialists involved in those, so we feed into it. We've upgraded our technology and our infrastructure, both mine sites, Eagle and Kena, our core shacks, equipment, space. We've given the capacity for our site teams at short notice, as is required by what work is going on. They can bring in extra people, extra technicians, extra core shack geologists, extra underground beat geologists. What does all that do? Time. Time and quality. The information that we're generating, you maintain the quality of that work because that data, everything is based on that data. If the quality slips, you got problems in where you're drilling and where you're mining. maintain strong, clear, good quality data. What do the geologists do with that? It gives us bandwidth to analyze that data. And I mentioned time before. If you're understaffed, underutilized, under-equipped, you're chasing. You don't have time to assess what you have, and most importantly, to look forward. This structure allows us to look at the information and generate ideas. And as you know, ideas become gold bars. Jurisdiction. It cannot be understated. Cannot be. We have 2 high-grade mines in arguably the best provinces in the world, Quebec and Ontario. It gives us benefits. Stable regulatory regime. Infrastructure. Strong environmental and social laws, and exposure to a skilled and experienced workforce. We can focus on our business. We own our business 100%, and you'll notice in the top right corner, we have 8 rigs active today at both sites. The number of those rigs are going to increase in the coming months to double figures as we bring in more surface rigs, barge drilling down at Kiena, and helicopter-supported drilling on our remote areas up at Eagle River. Fill the mill. To deliver on a per-share basis, the company has focused on an organic growth strategy. It's very simple. Fill our mills. Our mills were built decades ago. They were processing lower grade ore and higher tonnage, very different deposits to what we're mining today. This has resulted in both our mills running at 50% capacity. The aim is simple. Fill them. We're looking to get them to an 80% equipment effectiveness at both our sites. And there's 3 pillars enabling us to do that. Strategic exploration, what we're calling our global model work, and cost optimization. The exploration and the global model is what we'll touch base on today. This is a very important slide. It sets the scene. So on the right, we have in gold our global production over both sites since 2016 to 2024. You can see it's been steadily increasing as we do our work, as we increase infrastructure, as we ramp up. We're doing well. 170,000 ounces in 2024 and then 185,000 last year. We're targeting more. In blue is our global reserves over the same time. Good story. It's been growing. Flattish over the last 4 years, but this is important. Observation. On the right-hand side, in the lighter grey, we have our measured and indicated ounces, and the darker grey is our inferred. Put them together, it's our resource inventory. And for the last 6 years, you'll see that they've been declining. Our drill meters in the first 3 years, we're averaging about 90,000 meters. Average spend about 6 million per year. Since 2019, again, it's just an average. There's highs and lows through it all, especially COVID. We've got an average of 170 kilometres of drilling, $22 million spent. We spent more last year. You'll notice that we have some discoveries as well. Kiena Deeps was discovered in 2016. Falcon 720 was discovered in 2019, and we got maiden resources for both in 2019. 2021, we've converted the maiden resources across to reserves. Fantastic. What the graph shows us is that our teams over this time have been able to replace depletion and grow our reserves and make discoveries. It's fantastic work. Can't take that away. It's commendable, very commendable work. Proud of them. They've had limited budgets and the focus was on replacing reserves. Downside of it is we've got a declining resource base. It's unsustaining. In time, the resources that we've been converting will hit a cliff, and then we'll start eating away at our reserves. We're in a catch-22 situation. We need to spend money to extend the life of mine, but you minimize the money that you're spending because you've got a short life of mine. You don't do the infrastructure, underground platforms to give you those drilling angles. That has all changed under Anthony's leadership. We needed a global strategy to break that cycle. And this is where we are. As part of this work, we step back. We look at what information we have and what's our work stream. What exactly does exploration, drilling, geology do, and where does it contribute to our mines, our surface, our life of mines? Our whole work can be pretty much summarized into 3 broad buckets, and these buckets are time-bound. Short-term, short to medium, and medium to long. In the short term, up to 12 months, we're supporting the life of mine. We are replacing reserves. We're doing grade control drilling. We're assisting the mining teams. Some of the global model work we'll talk about will help in this aspect because you're converting to replace our reserves. Extending life of mine, 1 to 3 years. We start looking at delineation of things laterally and at depth. We're drilling to try and make a new deposit, but we're only looking at places that we've drilled at before. Consolidation of things, near mine targets, looking at higher grade if we can continue it. And then the last bucket is what we're looking at growth, extending our life of mines. Longer term, 1 to 3 years, no. We're talking 3+ years. It's foundational work. The strategy is that we need to do the work over all 3 buckets. We cannot focus on one.
Hi, I'm Allison.
Hi, Alison. How are you?
Good, how are you?
Good, thank
Just a quick question here. Can you kind of remind us for 2026 how much of drilling is sort of dedicated to each of those 3 buckets?
We'll get to that one another slide, Alison. We'll keep going on this at the moment. So the strategy is to drill in all 3. You focus too much on one, for example, support life of mine, and we'll have the same pictures we had on that graph for the previous. You focus too much here, looking out, your mines will suffer because you're not going to have replacement of reserves. It will give the impression that you don't have life of mine until the time comes that these can convert. You'll get a lag, and that time is critical. To grow the resources is the key part of this so that you can keep doing the reserve work. I'm very proud of this slide. This is quite exciting. A lot of work has gone into the background of this slide, and this is just a summary of that work being done by the site teams, by Brianne, by Hanan, lots, and I'll explain why. Let me introduce our target triangle. It's a management tool. I'll spend a bit of time unpacking why this is so critical in the work that we do and how things go forward. When you first look at an exploration strategy in a new area, even in a business, you want to know your inventory. What do you have? And this can't be driven remotely from head office. It's the people on site that do that. And I'll explain the reason why in a short while. You look at all the data, geochemistry, every rock chip, soil sample, bark sample, litho sample, channel sample, everything at surface, underground information, old mapping, channel areas. You're looking at geophysics, IP, magnetics, EM, magnetotellurics. You're looking at drilling, everything, historic, recent, what's in the government archives, what database you have. The idea then is that you're looking at data to define a target. That target we want to bracket as a rectangular prism, and that's important, a rectangular prism. We want to be able to give a mini and a maxi to the lateral extent of that target. We want to give a mini and a maxi to its vertical extent and to its average width. We know the density, quartz 2.7, intrusives a little bit more, but then we can look at a range of the grade. By looking at these average ranges, we can come up with a metal content of that target. So you get a grade, a metal content, and the last thing that we do as geologists is it would apply a probability factor, the ponderation. That probability factor is the geologist's confidence in the data that he has when he assesses and creates this target. If he has a lot of drilling, for example, something that we call an advanced target, it's tier 4, it's got over 10 holes, it's got geochemistry, it's got consistency of mineralization, he might give it a factor of 0.8. When it's a tier 6, this is pretty much conceptual. It's geochemistry, it's a geophysical trend, it's looking beyond mineralization. You may even have only one drill hole, but it's an area of interest, it's a target. But you'd probably give that a 0.2 probability, because whilst you might estimate 100 ounces there, you're not going to give it a 0.8 probability that it's fairly consistent, because you don't have a lot of drilling to confirm it. So you're going to factor it down into probability. That allows the geologist then to step through, and every target is put in a layer, tier 6, tier 5 and tier 4. And the important takeaway is these targets are not in resources. They are exclusive. We have over 270 of these. It's the geologist's tool. And now this is the management part, is which targets do they prioritize first? Which ones do they work? This is where the integration of those 3 buckets in the strategy, the short to medium, and medium to long terms, you look at the targets, because you have to drill on all 3 of those buckets, but the geologist must also work on all levels of the triangle. The aim of the triangle is you test a target, and the lower part, as you increase your understanding, it will elevate to a higher level. Similar up to advanced, and then here, these are meant to be your most fruitful ones that you're confident you can drill, and they would become a resource. You also kill targets. Geologists can hang on to them too long. You want to eject the ones, they don't meet our corporate filters. And our filters are, if it can't make 100,000 ounces, it's the first one. If it can't make 500,000 ounces, that's the next one. What does 100,000 ounces look like? I know. I can conceptualize it. Some of our geologists need to learn that. This is what we've been working on. If you imagine 500 meters along the ground, a quartz vein, it's 5 meters thick, and it's going down 100 meters below surface, and it's 5 grams. That'll give you 100,000 ounces. You can conceptualize, you can visualize it. It's a tool. Now, as part of this work, I just talked about the size of a geometry of a target. The next part of it is to take a tier 4 to inferred. There's a conversion rate, very similar to when you convert inferred to indicated, indicated to measured, measured into reserve. It's approximately 50% to go from inferred to reserve status. So if you start with 100,000 ounces, you're going to end up at 50. Rule of thumb. From a tier 4 to reserve, it's about a 40% conversion. You start about 100,000 ounces, you'll end up about 40. That's important, because when we're talking about, we're targeting inferred material to grow at the base of our triangle to convert later on into reserves, it means we need large volumes. And to build those volumes, that's aggressive drilling. Thank you very much for the money. We'll spend it well. Next slide, please. Now, it's a good question before, Alison. That triangle is about building momentum. We start doing the work. We had a big push last year. We're going to do even more this year. 207,000 meters last year. We're pushing to 270,000 meters this year. And yes, we've got a breakdown, but this program, because of the 3 buckets, short, medium, and longer term, we have what we're calling as growth targets. And growth is drilling outside of our mineralized wireframes. It's outside the block model. We're looking for new material. We're looking for extensions. We're looking for things that we can peg and infill and drag it in later on. So it's a big commitment for growth targets. The other 50% we're putting to our normal business. We're infill drilling. We're converting. We're doing grade control. We're growing and converting our indicated to reserves. And we're helping our mining teams by looking at the stopes in advance, up to 12 months in advance. It gives them confidence in what they're going to produce.
And maybe Joel, explain how different that was before in terms of that breakdown.
Good question, Anthea.
Just for people's context.
Yes. So on the screen, we're looking at 50% and even 60%. Remember back 3 years ago, 4 years ago, back to 2019, we had very little step-out drilling into growth. Very little. Most of the drilling, we're talking over 70%, would have been delineation and conversion drilling. It's a change. And will you see that straight away? No. It takes time to build that inventory up. But what I will expect you to see is in the coming years, 1, 2, 3 years, you will start to see a growth in what we're calling our resource stocks. And you should see press releases coming out with good drill intercepts that are talking about down plunge continuities, new discoveries, new areas. That's what you'd be looking for. And then that will translate across into our resource and reserves.
Andrew.
Hey, Drew.
On that breakdown for 2026, how would that have been different for 2025? Or are you already transitioned to this?
We started last year.
Okay, so similar numbers last year to this year in terms of spread of drill meters.
Similar, but in the second half of last year, Andrew, remember, we did a focus on what we call global model targets and drilling. So that was conversion, and that was a big push to grow our reserves for our technical reports, life of mine. But we didn't just stop at that, but that was our key focus at Eagle, global model drilling, convert this. But whilst we were doing that, we also did some extra drilling, actually spent a bit more of the budget than I was supposed to, but that's good. Brianne did extra drilling from surface, looking at growth in 720 Falcon, looking at between 6 and 2 zone, looking at Dorset, looking at Mishi, looking at our iron formation. Down at Kena, we did a lot more barge drilling. So yes, whilst we did conversion drilling 2025, we're doing a lot more of this growth this year.
Thank you.
This one's a question on, with your tier 4, 5, and 6 targets, there's a lot more at Eagle River. Is that largely a function of acquiring Angus Gold as well last year?
Yes. Alison, excellent. Yes. Our land package, since we acquired Angus, grew up to 400 square kilometres. It's been great ground. It's highly prospective. We'll see some images on it. It's there. And there's a reason why Kena has got less. It's 76 square kilometres. It's smaller. Doesn't mean it's less prospective, but there's a very good slide that shows you why there's less targets and why we're building the triangle even more.
Hi, Don from National Bank.
Hey, Don.
I just had a question on slide 11. Just to clarify that, you had some targets here for your, at both Eagle and Kena target ton per day. You showed what 2025 was and then what your projected targets. Those conceptual targets, is there a time frame associated with that? Is that, like you're talking about looking at the results from your drilling program in a few years, or we sort of assume maybe those throughput targets are?
Don, excellent question. So what Don was asking was, we've got conceptual targets. Are these going to be sitting out 5 years' time or 10 years' time? Now, Don, I've got a slide later on that I can refer to that will answer that question. But in broad summaries, no. This is about working on all those buckets, short-term, medium, and long-term at the same time. So yes, we have started doing deep conceptual drilling, looking at these down plunge continuities. And yes, you will be seeing a press release in the coming months as a result when we finish that and we get the assays back. Global model. Now, I'm speaking to this because we have talked about it for the last 1 to 2 years. I just wanted to make sure that when you leave this room, the concept of the global model has hammered home and you know what we're talking about. Global model started by going through all the old data, the old underground development, channel sampling, mapping, drilling, using that information, looking at the development, the stope locations. We rebuilt the geology wireframes. We looked at the logs and the drill holes to see where the shears were going. We looked at the mineralization, because there's a lot of mineralization at Eagle. A lot of it's associated with shears and we can see them line up nicely, but there's still a lot of intercepts that are outside. And the question mark sits, where does this come from? How do we hang this together? That's the opportunities that this global model shows us. On the screen on the left is the result of doing this work. Grey is underground development and stopes. The coloured ones, orange, red and purple, these are material. When we run the block model and the estimation process, we get 4 categories that are produced. Category 1, measured. Category 2, indicated. Category 3 is inferred. And predominantly there are other factors, but a simple way of thinking of it, it's hole spacing. As drill holes are closer together, you get more confidence. Other factors apply, but measured 20 to 25 metre spacing. 12 and a half, 10 to 12 and a half metre spacing. Indicated is about 20 to 25 metres and inferred is 50 to 60 metres. Category 4 is material that is wider than that. We're talking 60 to 80, maybe 100 metres apart. They're too wide to meet the classification criteria. And as a result of that, they occupy category 4, but they don't come into our resource work. They don't come into our reserve work. What you're seeing on the screen is category 4 material, and the colours, our cut-off grade is over 4 grams. So we're showing material that's over 4 grams. Global model material. Global model is material that's been left behind by historic mining activities. It's above cut-off grade, and it's ore that can be incrementally fed to fill our mill without offsetting a single high-grade tonnes that we have from production underground. The costs are sunk. These are opportunities where we can go back and take more. And if you look at it, there's an awful lot of high-grade material that's still sitting behind. You look at some of these old areas, and I'll just highlight some of these through here. It's 200, 6 zone, coming through here in the 5 and 7, and even in the Falcon and in the 300. This big purple one here, that's sitting just off No Name Lake. It's shallow. 200 is shallow. This will bring us to another question when I go to the next slide. When we take all these shapes, the next step is we assess them in 3D. We actually then do a desktop study, and this is the whiz kids that we have like Hanan, where they change that classification to indicated, and they take it through the steps to see whether there's a high probability that this material would translate into reserve. So it's not even just the grade, it's where they sit spatially in 3D. We do that homework, and as a result of that, we get some panels, target panels. And these are the shapes you've seen us advertising. What I showed you before was an old image from way back at the end of 2024. This came out mid-2025, so it's evolving. And it continually evolves as we do the work. Key takeaway on this is look at the height of some of these targets. That's 250 metres. So we've got 200 metres, 200 by 200. They're phased. We started drilling these targets middle of last year. 40,000 metres. We're going to finish the drilling the other half of these targets in Q2 this year. We've got new resource models that we're going to release in our June press release to go with our technical reports. But that work then, you can see it's iterative. we will do that process again because it highlights opportunities. It not only highlights areas that are around existing infrastructure, but it highlights areas that are further away. Remember, our mill is filled just with global model material at Eagle. Do we have any questions so far?
Can you just explain why some are blue and some are yellow? I realize this by year, but I'm not
That's
really
all.
sure why.
Sometimes, Andrew, good question. I shouldn't be so flippant. Sometimes it's because we've got 4 rigs drilling underground, and it's the sequencing of where we can put those rigs to support and the integration with the underground development. Because, for example, if we're mining and all the development is happening here, it takes a special effort to put the services and reactivate this area to allow us to drill here. It takes time and planning. We can't go to our mining teams today and say, I want to take a drill rig there tomorrow. Can you make it happen? You can imagine what would happen. And this is why we integrate with the chief geologists. We have weekly meetings talking just on this. It's driven by Hanan and Brianne. It's that integration. We have to give the miners time to prepare. They can do it, and they are understanding why it's so important. That's that scheduling. So yes, we've had to do a breakout. Some you can see are yellow that we had to do in 2025. Some we did in 24 drilling. And some of the yellow ones, 25, we're drilling and finishing in 2026 because we have services, air, water, power.
Hey, Luke Bertozzi. Quick question. I'm curious, this global model work, how much of this will show up in the technical reports that are coming?
Can I? It should reflect a spike in the reserves. Because remember, we looked at these areas. They're not in resource. They're not inferred. They're not indicated. They're not measured. Hole spacing. But we're drilling them to increase the hole spacing, and then we can come across into indicated, and then it sits with the engineers during the reserve work to see if we can develop mining shapes or not.
I think, Luke, what's important is, like he mentioned, he's only done 50%, 60% of that drilling. So this year, what won't be showing up is the next part of that program, which he's doing now to June. So that will come up in the next phase. So it's the first phase that we were able to draw was in there.
And what was the cut-off date for the drilling for the technical report? December, okay. Thanks.
Good. Thanks, Luke. This leads me to one other aspect. Capital efficiency of drilling. Sometimes we get asked, if you want to grow your resources, just put extra rigs on surface. Hammer away, 8 rigs, 10 rigs, no limit. We can, but to be prudent in how we manage our money. And I'll just use an example. Drilling down here at these depths, this is about 1 kilometre underground. We can drill these from surface, yes. But these would be about 1.4 kilometre deep holes. The cost of drilling those, $60,000, $70,000 to get to this area, because we want to know that information now. It takes good drilling to put holes 50 metres apart from surface over 1.5 kilometres for that grouping to become inferred and then indicated. Yes, we can do it, but the cost is through the roof. The other way of looking at it is we can be more effective in drilling that from underground. Underground development, put in a platform, drill multiple levels, 300 to 500 metre holes. It just means discussions and scheduling and planning with our mining teams. The shallow targets, yes, for sure. We've got underground drilling. Our rigs are a certain number. We allocate them to tasks, but it gives us the opportunity, like over in 2 Zone to the east and above the Falcon 720, Brianne has drilled with surface rigs last year to advance our understanding in those areas because underground rigs were busy doing other global modal targets. It made sense. They were within that range and we had availability. Let's step down to operations. Eagle River. It's a snapshot. The mine's been going for 30 years. It's produced over 2 million ounces. 2019, it's a key one. The Falcon 720 zone was discovered. It's a bit of the regional geology. It's the Wawa sub-province. 3 key greenstone belts. Between them, they produced over, well, they've got an endowment of over 35 million ounces. You've got Hemlo in the greenstone belt out here with the Hemlo greenstone belt. Michipicoten through here, which has got the Alamos area, which is Magino and Island Gold. And then where we are, the Mishibishu greenstone belt, Eagle River. 3 ingredients help contribute to that mineralization. We've got the age. The ages trend between about 2.76 to 2.68 billion years ago. It's a spread of about 80 million. Why is that important? They're similar to the ages in the Abitibi. You need those rocks to help drive the fluid flow, the engines, the heat. The age of the mineralization is about 2.7 to 2.68 billion years ago. It's a spread over about 50 million years. Again, similar to the Abitibi. There's some variances, but they are similar. Competency contrast. Felsic volcanics sitting against basaltic rocks. As you strain and move them, they crack. And that's a key part for the fluid flow. The best grades are in the laminated quartz veins where it's cracked, sealed, cracked, sealed, cracked. You get visible gold and it's stupendous. When you listen to the stories that come out of Ireland in their press releases, some of our high grade and at Kena, you look for that crack seal, the type of quartz vein, the competency contrast. The last one is the structures. The host structures are broadly east-west trending. They range from northeast to southeast, but you target those. They splay, they move around. You don't get a lot of mineralization in north-south orientations. Just zoom into our property, 400 square kilometres since the amalgamation with Angus. Key observation, our major deformation zones. We've got the Pukaskia across here, trending northeast. A flattish part, then you've got the Mishibishu deformation zone diving down to the southeast. We've got the Dorset zone, and then we've got the Eagle River splay and the main Eagle River mine. East-west, northeast to southeast. Next, please. Another important slide. Simplified geology in the background. Green are volcanics. The pink are your felsic intrusive rocks, your granites. The bluish colour, that's the metasedimentary units. Highlighting the targeting work that we did with those triangles. The tier 4s are the colours. You've got the dark blue, which is the tier 6, the medium blue, which is a tier 5, and our most advanced targets in the gold, tier 4. And the size of those circles is the ponderated potential metal content that each target holds. Personally, I'm not too concerned by the size of the target. It just means there's more that to be found. The best grade and the highest grade is all sitting around the Eagle River mine. The takeaway is how many targets. We've got over 170 targets here. A majority of them are in the tier 6s, and if we look at the permit boundary, a lot of them lie along the major structures that are going through. And you've got an amalgamation in this area, and it's underexplored. This is 15 kilometres. That is 10. Through here, it looks like we've done a lot of work, but we haven't. We've been focused on the Eagle River mine, and that's it. We're building momentum. The permits are underexplored, very underexplored. Finding targets to drill is not a challenge. It's being aggressive and turning these over. But the opportunities are significant. This is a great slide. This is a long projection at Eagle River. We're looking north. Left hand is west, right hand is east. It's a projection of all the mineralized slides coming together. Grey is the mineralized wireframes, the darker grey are the stopes. Key observation, red. Those red dots are every drill intercept that's over 20 grams per tonne. Over 20. One of the questions come, the mill's full, the global model work is happening. What about sustaining the grade? What can we look at for the next 5 to 10 years of high grade mineralization so we can blend it with lower grade ore? 500,000 ounces, high grade material. We've got high grade for the next 3 to 4 years in the reserves, fine. It's looking beyond that. What can we do? I talked about a panel before. So if you come back to a similar panel, 100 metres wide, 400 metres high, 2 metres thick, just 2, 15 grams per tonne. That will give me 100,000 ounces of potential metal here. I just need to find 5 of them. Just 5. If I change the grade to 20 grams per tonne, it's only 300 metres high, not 4. And if you look at the red dots everywhere, and you look at the lineation, the plunge, one key thing with our greenstone belts, Wawa and the Abitibi, the mineralization has a short range horizontally, 300 metres or so, but a long range vertically, 1 to 2 kilometres. When you look at the dots, down plunge, the chances of finding and replacing high grade over the next 4 to 5 years, yeah. Another way of looking at that 100,000 ounces is we don't need to find 100,000 ounces a year. We can do 50,000 ounces a year for 10 years. We already have high grade. We're already producing. We're already blending. We're maintaining a steady profile. If we can keep 50,000 ounces coming in of high grade for the 10 years, we meet the same profile. It's brilliant. It comes back to perceptions. Now, I'll take you one step down. 6 Central. This has got incredible grades. It's the same tenor as the 300 at the same level. And you look at the intercepts that we've been releasing and the press releases. On the screen, we've got 49 grams, 115, 40 grams. We've tracked this now since 2023, the discovery, over 600 metres. And it's still open. I invite you, do you see any reason geologically or what you see on the screen that that would not continue for another 300 to 600 metres? That's one. You add the 300 fold, the 300 down plunge. You've got the 311 up and down plunge. 200 zone. Shallow drilling. Good grades. Drilling's dropped off. Don, you talked about before about timing of deep holes and looking for down plunge. This is work we call sustaining. We've got the global model. The mill's full. This is about looking what else is there. Can we sustain the high grade? Now we go, what about a new discovery? What about stepping out? These big yellow dots, these are surface holes. We've completed the 800 one coming down. That was a 1.7 kilometre hole. The 6 Central one is in process. It's drilling. The Falcon one we've completed, and we've got another one going that's even further. They're following up on some IP targets. We will do a press release on these in the coming months. But yes, Don, you can imagine if this is successful and we hit high grade and it's part of the structure, then it makes sense our next line of drilling is to follow it back up. But if we intersect the quartz vein, we intersect the structure, it says, yes, we have the system, we have the fluid flow, we have all the right ingredients. We can plan follow-up holes. We don't have to do them this year, but we can plan each year in the budget. And that helps our mining teams because they start thinking capital allocation. They start thinking, if there's mineralization down here, how do we sequence our mining instead of look at airflow, engineering, shafts? It's the integration of mining and the exploration and geology work. We're improving. Press release on 6 Central. We've made it before, you're seeing it. The key takeaway, it's about 100 to 150 metres wide. We've got some great intercepts. 8 metres at 40 grams. That's over 100 metres down plunge. Still open. Still open. Next, please. So we've talked about filling the mill, our global model work. We've talked about at Eagle River, high-grade opportunities and sustaining. We've talked about step-out holes for growth. What else is there in the growth on our bigger package? Zooming out, I want to introduce you to our Mishi Magnacon corridor. We've mentioned this in our quarterly webcasts. This is traditional boots on the ground work. Our structural geologists and teams are out there walking the ground from Feather River all the way around past Mishi, mapping, rock chipping, traditional work. Why? I want to validate this contact. And this contact, this red line, turns out to be a thrust contact. It's a low-angled structure dipping to the north. It's not just a change between rock types with sediments to the south and basaltic units to the north. It's not a simple contact. The structural mapping is showing fold hinges, and those fold hinges plunge to the east at a moderate angle. Why is that important? That work is showing that the mineralization at Mishi, whilst it's a style that we looked at, it's lower grade, those fold hinges are indicating another structural control on that high grade. There is a plunge to it. The previous modelling and wireframing didn't factor this insulation. Same with Magnacon. It opens up opportunities. We drilled deep holes under Mishi, and now we've intersected higher grades. And you've seen that in our previous press releases. How do those high grades hang together? We start applying structural information, the plunge to it, and we can start getting continuity. What's exciting about this is that work is also Feather River historic data. Fantastic. Brianne's going to drill those later this year, but come back a little bit, a little call-out window. We've got rock chips in an area away from measure. New discovery, 25 and 50 grams per tonne, a cluster of anomalous samples that shouldn't be there. It's a drill target for us this year. The fluid flow through here, that's the importance of the thrust fault. A contact doesn't mean fluid flow. If it's a reverse structure, north being pushed over south, dextrally, that's seismic pumping. That movement during regional deformation, if you had a gold-bearing fluid, it will pump along those structures. It will look for traps. That's what opens up this whole 15-kilometre trend now to find more. And with the grades, we're starting to look at 1 to 2 grams for Mishi pit. At these gold prices, we start thinking, is it economic? Cut-off grades here previously were a lot higher. Latest numbers were looking at 0.6 grams per tonne. 0.6. You'll see more information coming out in our report. But the mill is so close. Opportunities. If we take this and we step out now on the next slide to our bigger picture, we showed this before, but now look at it with a different lens. Mishi Magnacon across 15 kilometres, potential lower grade material that we could probably look at as an open pit, but also some higher grade opportunities. Zoom out a bit further and we've got Abbey Lake and then Dorset. Other areas with 1 to 2 gram material. Dorset, is exciting. It's 10 kilometres, Angus work, and they're now drilling there last year. It is a mirror image. We've got volcanic units to the north, and we've got sediments to the south. That contact was considered a lithologic contact. It was never considered to be a thrusted contact. We're going back with our structural guys to look now specifically for that same information. Why? Because then we look at the high-grade plunges at Dorset and Dorset West, especially Dorset West. Is there a high-grade opportunity that we haven't seen before? Brings the bigger picture of a thrust duplex. Bit of technical things, but we could have structures that are ramping up of a deeper soul, structural soul, material and fluids moving all the way through, but it opens up the whole strike length of those structures as potential mineralized traps. Stepping out even further, other areas where we have drilling and we have low-grade intercepts, low-grade being 1 to 2 grams. We've got our potential IP areas to the south and west of our Eagle River mine. We've got Cameron Lake Iron Formation where we've intersected 60 to 70 metres at 1 gram per tonne over an iron formation that is over 1 kilometre long. Abbey Lake. We've got 6 areas that we could potentially look at open pit material. And if you envision a hub and spoke model, a central plant, multiple open pits that are around it, that could be between 200 to 300,000 ounces, shallow. But we're looking then at a volume of material that we can start doing some decent desktop study work on. Can we get another mill? Because remember, our mill is full. Eagle River has already filled it. So this work is about honouring the geology. It's not eating the fillet of a steak of a cow and leaving the rest of the cow behind. This is what's on our property. It's how we leverage that information to maximise value. We've got a lot of work to do in the next 3 years. Because remember, we're not just drilling the first bucket, the short and the medium time. We're drilling on all 3.
What do you mean by the mill is already full? I mean, is that kind of, these are, once the mill's full, this is even going beyond that?
Correct, Don. Correct. The global model work is filling the mill.
And the extensions.
The extensions, that's it.
Maintain the grade.
And maintaining the grade. So everything else is upside. But how do we get to a volume to say, what do we do with that upside? It's theoretical for now, but I can say, well, I get a new resource at Mishi. I get a resource at Dorset. I drill and get a resource at Abbey Lake. Iron Formation, Eagle River, Feather River. I've suddenly got open pit material. What do I do with it? Can I handle that differently?
Thanks, Ralph Profiti at Stifel. Abbey Lake is 40, maybe 50 kilometers from the mill, right? Is that the ultimate level of kind of the circle of influence on how far you can go out with the hub and spoke?
No. Ralph, Abbey Lake's only about 20 kilometers away. So the mill's up here. And this is the access road. The access road runs right past Abbey Lake, which is what, I know it sounds amazing, but on one side you've got these quartz veins sticking out of the ground, and on the other side you've got a lake with cabins. You think, what? This is driller's heaven. I mean, they occupy a shack on the edge of a lake. They go 1 or 2 kilometers and they're drilling holes. Happy drillers. But this is what makes the appeal for Abbey Lake, is it's close to the mill. And it's 10 kilometers long. It's IP. It's rock chips. It's got some historic drilling. It's got magnetics. What could be more?
Just wondering at Mishi, like that, you guys were mining there as of like a few years back. Just wondering, like with the higher gold price, is there not an ability to kind of do like another cutback there, or and just wondering, is there any additional permitting that would be required to kind of restart operations there, or is it still completely permitting for operation?
Sorry, I missed your name.
Wayne.
Wayne? Yeah, Wayne, hi. Good, very good question. Mishi Pit, we did mine it in the past. We have completed drilling there. We have more planned, and we're doing a resource model update now. You'll see the results of that in our mid-year technical report and press release that'll come with an MRMR update. We'll use that information as part of our review in the area, permitting requirements, TSF work, everything. It's too soon to say at the moment, Wayne. But we have drilled, and we are drilling in the Mishi area and Magnacon.
We've basically done that global model there as well, Wayne, as well as additional drilling. I think you did like 10 kilometers of drilling, January 2020, quite a lot of drilling.
Brianne, can you recall how many meters we drilled at Mishi Magnacon last year?
Yeah, it's in the realm of 10.
10 kilometers.
Yeah, so I mean, like, you know, when you guys were last mining there, gold was probably like, I don't know, $1,500. There's a pretty reasonable expectation. I would think that there's additional ounces there. Just trying to understand how quickly that could be accelerated back into production.
I think June will give you a good indication of that. I mean, it's both Magnacon as well, Magnacon and Mishi, both there.
And that would be included in the updated mine plan?
Mishi in the MRMR is a snapshot in time. Magnacon, we've still got some more drilling to do. Remember, we've got an idea for Magnacon. It was mined in the past and then stopped. Adits were there, development was there, one stope was pulled, and they went south and mined at Eagle River. But we need to rebuild the geological models there. We need to factor in the controls of that mineralization. A lot of the drilling was done north to south. If you haven't got they didn't factor a plunge that's going to the east-northeast on the mineralization, the higher grade. So they could have drilled over and under, and they biased then how they built the mineralization models. Okay. Any other questions for Eagle before we step into Kena? Okay. Snapshot of Kena. It's been sporadic production over the past 45 years, 1981 to about 2026. It's produced over 2 million ounces. Key takeaway from this side is in 2016, we had our discovery hole for Kena Deeps, 17 meters at 193 grams per ton. Kena Deeps is amazing. That's absolutely amazing. Regional setting, Abitibi, 450 kilometres wide by about 150 kilometres north-south. It's got over 200 million ounces of gold endowment. There's about 100 million ounces in the top structure, which is the Porcupine-Destor Fault, and then in the southern broad structure, you've got the Larder Lake, which is about 110 million. The Timmins camp out here to the left is over 60 million ounces of endowment. It's incredible. You see where we are on the right there, near Val d'Or. We've got some mines operating very close to us. Canadian Malartic, one of the largest ones in Canada, 26 million ounces. We've got El Dorado at Lamarck. It's about 13 million ounces, old production plus what's there. It's endowment. And Goldex, 3.5 million ounces endowment, all within about 6 to 7 kilometres of our property. Zoom in, please. This is a very interesting slide. It shows the tenements that we have in the area. You'll note that there's no free space. The ground is premium. It gets snapped up very, very quickly. You want to operate in this ground, you talk joint venture, you talk relationships. There's no free ground to apply for. The second observation is all these black points are mines, old, active, and now. Canadian Malartic, you've got Lamarck to the east, Goldex here, and you'll notice on our package, one. Shawkey Historic, Cisco Historic, Sullivan nearby. What's wrong with our ground? It looks like there's nothing there. It's a very simple answer. We'll go to the next slide, please. Water. Lake de Montigny. 60% of the claim is underwater. The water's not deep. It's 10 feet, 3 meters, but still, it has limited the amount of exploration because you just can't take a drill rig out there and drill. When we do barge drilling, It's in the summer months. You got 3 months, maybe 4. That's impacted what's found on our property and the area. It doesn't mean it's not prospective. And towards the end of this presentation, you'll see some airborne geophysics to show what we see in the area and what we're targeting. But it's certainly not the geology. It's certainly not the prospectivity. It's certainly that there's no mineralization there to be found. It's just underwater. Next one, please. Oh, sorry, back one. Just to highlight one aspect. You've got 2 corridors. We've got the northern corridor and the southern corridor. Cisco, past production, and keep this in mind, about 900,000 ounces at about 9 grams per tonne. That development sounds, oh, it's historic. They only developed down to about 400 metres vertically below surface. And then they stopped. And it was mined a long time ago. Southern corridor, where our assets sit and where most of our targets, you'll see that coming up. In yellow is an area where we have a style of alteration and mineralization. Quartz tourmaline veining. You've got some examples of core at the back there with Dubuisson and the top parts of the table here. I'll touch base on that later in the presentation. Similar to Eagle, love this slide. Regional geology, an interpretation from us internally, from the old work that we had, not the new airborne magnetics that we did with drone last year. The dots, our targets, 76 of them. The highest grade that we have, Eagle 9, Northwest, and Cisco. The rest are in the 4 to 6 gram per tonne range until we do more drilling. Key observations. In the north, our northern corridor between West Dome and Cisco. West Dome is an old target. It's got over 440 drill holes. That's incredible. But 90% of those drill holes are less than 400 metres vertical. Less than 90%. The best mineralisation in the Abitibi kicks off between 1 kilometre to 2 kilometres depth. That's the juicy part. Our Kina Deeps mineralisation, the high grade, starts at about 1 kilometre down. You'll see on this image a bit of a lozenge. The geophysics will show later on what that's about. We don't know what that lozenge is, but it starts at about 900 metres below surface. And that geophysics is critical for our timing and part of our story. Pontiac target to the south, you see malartic shafts and head frames about 6 kilometres further to the west. It's the same sedimentary package we have on our ground, a long strike. It's the same structure. No deep holes. We've got 2 rigs drilling down there now. They've been drilling since February. They'll be part of an update that we'll make later in the year. Zoom in on a long projection now that runs through here, our southern corridor. We're looking north. Red are mineralised bioframes. The scratchy lines you see in the background are drill hole traces, as well as some underground development. Presqu'île is in the west, and about 5 kilometres further over, we've got Dubuisson in the east. That yellow line going to the right, to the east, is level 33. It's 330 metres below surface. To the left is our Presqu'île exploration ramp. We talk about that in our information releases. It's under construction. We expect breakthrough in Q2. That opens up a whole area, from my perspective, for drilling. Kina Deeps, we've talked about it before, starting at around a kilometre below surface. And we've got drill holes down here that are near 1.9 kilometres deep, possibly pushing about 2 kilometres. And look at the grades. 83 metres at 10 grams, 3.8 metres at 63, 3.5 at 13. This is the A zone, what we call ZA structure. It's red, you'll see it in the coming slides. It's the most consistent that we have. It's beautiful grade, it's got visible gold. This particular core box you have in front of us, it's got a drill intercept 1 meter at over 6,000 grams. We dilute that down to 2,250 last year when we made a press release on it. It was the highest intercept globally in 2025. Visible gold. It's a key thing with Kena Deeps. There's a lot of visible gold. We don't have a global model at Kena. Not yet. We've got to do the work. However, as part of the fill the mill, Presqu'île is the first one to come through. We don't stop the higher grade mining from underground. We don't displace any high grade tons, but we're incrementally adding ore from Presqu'île. Dubuisson is the next in line. We're doing some work on that to bring it through. However, it doesn't mean that it's going to end up being the next in line. My work is to find something that's closer, especially close to infrastructure. And I like B zone. I like VC zone. They're two areas that are very close. We can easily access mine if the drilling is positive. We'll get to Dubuisson. Northwest, we talked about before, is that being high grade. That's halfway between Presqu'île and what we're calling our Kena mine, but it's about 400 metres further to the north off the section. We could tunnel out to that one. Our options, the drilling that we're doing is looking at those time frame buckets, what we can bring in, short to medium, and medium to long term. We know the mineralisation continues. Down plunge. We're testing VC, we're testing B zone. We've got more drilling and more mineralisation to find at what we're calling our footwall zone and down plunge. 83 metres at 10 grams. That is not in a resource. That's deliberately left out. Oh, sorry, go back one please. I just want to point out, this is about 1,000 metres below surface. Look at how many deep holes we have in this area. It's a lovely big fat zero. We'll talk about Dubuisson later on. You had a press release, I've highlighted here, 25 metres at 4 grams last year. Some of the core we've got laid out. That's about 400 metres vertically. I highlight it because Goldex, love Goldex, similar style of mineralisation, similar host rock, but the best parts of it start around 900 metres below surface and it goes down to 1,000. What sits between our intercept and 900 metres below surface? All along Shawkey, Dubuisson, and Martin, even northwest. We don't have deep holes. A press release last week. We showcased some results, footwall zone and B zone. Footwall, no surprises. If anything, it's been more positive. Been able to define 2 extra lenses. We now have 9 lenses there and they're open. We've got 200 metres high on B zone. Sorry, on the footwall zone. And it's open up plunge and down plunge. Incredible grades. B zone. Did a lot of drilling on B zone last year. We've taken the main lens, been able to break that up now with extra lenses. We've got 4 lenses, the main plus 3 new ones. The main lens still remains exciting. We got visible gold the last round of drilling. As visible gold came back at 17 grams, 1.8, and this is capped, as well as at 20 grams at 2.2. What's exciting about it is you start to notice when you look at that, run your eye vertically, and you'll see there's elevated grades above it. This mineralisation, this ore body sits at about 5 grams per tonne. So when you're getting 2 metres at 8, 2.1 at 8.3, 2.9, 1.9 at 9.6, do we have a higher grade shoot within that general plan that we can then track that higher grade north and south? Alison.
With these zones, the footwall and the B zone, are they all hosted in the schist or are they hosted in some more basaltic material? Or just curious on what they're hosted on.
The geology changes a lot, Alison, but it's a good question. We'll get to that one on the next one. B zone, it's more competent. It's more of the basaltic unit. There is some schistose material that's caught in it, but it's there. VC is basaltic. However, the journey there, and that's the next slide, please. 2 images, the one on the right, one on the left. And this is the way to talk about ideas into gold bars. The one on the right is a plan view, bird's eye. You're looking at what we're calling the VC zone. Deep intercept, 5 meters at 43 grams. VC historically produced about 110,000 ounces at about 4.2 grams per tonne. So you're thinking it's low grade, but it produced well, 2006 to 2013. But then you've got intercepts like this. This is part of the story with the Abitibi and Kina. As you go deeper, the grades get better. What's underneath? This is the exploration drift. We stopped about at this bend here in the development when we first prepped this for drilling. From this bay, we tried to drill there. We put in 5 holes. We reported it last year that we'd failed. The reason why it failed is the contact between schistose rocks and basaltic rocks runs through here. We're drilling at a low contact to that schistose, and the schist creates a headache trying to push holes through. We lost 5 holes trying to get through that. It was bad ground. With the mining teams, we push the development out into the basalt, and it gives us a different angle to cut across that contact. We're drilling. Our first holes are going. It's a key area. End of quarter 2, early quarter 3, we'll have a second drill rig in there. We'll have them both targeting VC. And during the year, we will be pushing one hole out further to the north to test our north mineralization. On the left, this is a weird skew 3D image. In red is what we call the A zone, our ZA1 structure. It starts at around 1,000 and it goes through to almost 2,000, 1.9 kilometers deep. It's running. Then we've got ZA1, which is the blue, ZA2, which is the green. They're all lenses as part of the same structure. The footwall mineralizations, these are the lighter blue that you see going through. They're at a different orientation. This is messed with geologists' heads. One way to think about this, and Don, I'll refer to you on this one, is if you take your hand and make a cup, your fingers, angle it back to the right. That's the A zone. It's a fold. It's mineralized, it's running. It's like a fold hinge. It's a saddle reef. So the best way to think of a saddle reef is like Bendigo, Ballarat in Australia. If you take a book, a phone book, and you fold it, in the top, it'll start to dilate and open. You'll get quartz that'll settle in the limbs, in the cap, and then down here. That's a classic saddle reef, and they'll repeat. They're stacked lenses, and the continuity is along the plunge of the fold hinge. Kibali in Africa with Randgold was a large fold hinge. The 3,000 lode was the upper limb, the 9,000 lode was the lower limb, and the 5,000 was the hinge. And it plunged to the north kilometres, 20 million ounces. It has replaced reserve every year because of the down plunge continuity. A zone is the same. It's folded, it goes this way. The footwall zones, as you fold that, you're getting fractures above. It propagates up into the rock. That's what the footwall zones are. They sit to the north of the vein. We've got a structure where the fingers run, a dike, and they run up and you get lenses in this orientation, which are the footwall. It messes with the geometry, but that's the brilliance of having geologists at site for many years thinking, living and breathing the structure and geology. That orientation gets challenged. But as we drill holes, and we predict with the wireframes where the mineralization is, and then we can hit them, we've got the story. Now, this image, this is our 83 meters at 10 grams. It's deep. It's down about 1.9 kilometers. This is other mineralization down there. The host rock is basaltic with a little bit of basaltic schist. Predominantly it's basalt. We're drilling this hole that was targeting about 75 meters above it. It's from the 134 exploration drive. That was completed last year, and we've been waiting for that to drill this hole and follow this wedge up. This is wedge number 10. We tried to push through earlier and we lost this hole in the Norbenite fault. We drilled at a low angle, we've lost it. We've since done a follow-up wedge tracking through here, and we've gone through the Norbenite fault. Now we're excited because we're looking to see with this 83 meters, we've kept it out of our resource work because we don't know its orientation. Have we drilled down a vein? It shows there's grade there, there's visible gold, there's good high-grade intercepts. We'll leave it out. But if we get another hit above it, we start to put together a picture. And this is the important part. We're on the other side of the Norbenite fault. And if we go up plunge, we're starting to go up several hundred meters. What's on the other side of the footwall zone? All our drilling on the footwall zone, we haven't been able to punch past because of the Norbenite. So our veins for the footwall zone stop at that structure. This hole that we're drilling, the wedge, has huge implications for mineralization on the other side of the Norbenite fault, where we haven't tested. This is the ideas into gold bars. Our geologists need time to think about these things. And then I need to give them the backing, the support to test them. Anthea, thank you for letting the money come. These are not cheap holes, but you can see if they are successful, the implications that they can bring. And if they're not successful, hey, we've done our job. We still test ideas. It only needs one. It only needs one.
And it goes right. So it's an ounce per vertical meter argument that I think you're working on.
Ounce per vertical meter. That's what we're trying to grow on. Proof of concept holes. So Don, yes, we are drilling deep holes to test these concepts. And I have to say, the 109 exploration drive and the 134 exploration drive that we've been waiting for, they are now giving us platforms that we can test these ideas. Gold. Absolutely gold. Quick one on Dubuisson. Released this last year, some of the cores out. Hole number 68, 25 meters at 4 grams. Diorite host. What we were excited about is Dubuisson's been modelled at a cut-off grade, 2.6 grams, to feed our mill. It's part of our resource, it's part of our reserve. Fantastic. But with this intercept and how big it is, the style of mineralization, we have people with us that have worked with Agnico. They've seen what's happened down at Goldex. This material is a spitting image. It's the same host rock, the same alteration, same quartz tourmaline vein. We're testing now beneath this, but the key point is, how much of this do we have? We've got to do drilling this year to see if we've got some volume of this lower grade material. With that volume, we can start thinking about a bulk tonnage concept. Goldex, the cutoff is 0.9 grams per tonne. It's not 2.6, 0.9. They're feeding about 1.3 gram per tonne at the mill. Good competency host rock. Fantastic. Do we have the same? That's the question. Do we look like an Eagle? We've got our high-grade zones. We've got a style of mineralization. This is different. This is honouring the geology to look at the value. Zooming out, we talked about the drone magnetics that we did last year. This is one of the images. It's a mag image. The magnetics, the warm colours are magnetic highs. The cooler ones are magnetic lows. Generally, you use the magnetics as a mapping tool. Look at what the rock types are. It's usually the ultramafic rocks that will give you the magnetic highs. Your intrusive rocks can give you both, depending on how much magnetite is in the intrusive rocks. But you can get alteration within the intrusive rocks that destroys and lowers that magnetic signature, so they'll appear as a magnetic low. I'll just draw your attention to the north. This is the giant potato we were talking about before. It starts at about 900 meters below surface. It's fairly flat. We don't have any drill holes that hit that. All the shallow drilling is talking about basalt, schist, small diorite dikes. Nothing that would explain what this is. To the right, we have the Bullamark intrusive. It's about 2.68 million years ago. On the edge of that is the Sullivan mine, historic mine. The Sullivan mine produced over 1 million ounces at about 9 grams per tonne. Now you take a step towards Cisco. Cisco was just under 1 million ounces, again, at just under 9 grams per tonne. It's a good place to look. Part of the Abitibi is there's a phase of intrusion-related mineralization, and then there's a younger phase of mineralization, about 20 to 30 million years younger, that brings in some of the veining, the structures, and the deformation. You get a remobilization, you get an enrichment in the gold. What we're seeing at West Dome may be just the tip of the iceberg. We've got structures, we've got veining, we've got mineralization, but we don't know what's underneath it. Note the dark blue snowshoe intrusive. What is that at depth? Come over here underneath Cisco. Cisco is hosted by dioritic units. Really? Do we have quartz tourmaline veins? Have they been overprinted by structures that are cutting across this intrusive body and enriching things? Come down to Dubuisson. We've got a large magnetic feature, a low just to the southeast. Is that associated with the diorite? And have we just drilled the tops of that with our last deep hole? Go across here to Shawkey and what we call Shawkey South. That was our press release. You've got a magnetic feature, a low sitting just to the south of it. That's hosted in a diorite, quartz tourmaline veins, and we know from the government work and what they're doing, it goes across the lake and it ties up with the Goldex diorite. We've got opportunities for bulk tonnage material. We need to do some work. We need to drill that and see how much volume is there, but this material wouldn't go through our plant. We do the work, you see what we have in the volume-wise, and it allows us to step back and look at the options on how we can treat this material. But we need to do that drilling now. Takes me back to the last slide. Same geology. Again, a different perspective. Where can we look at bulk tonnage material? Where can we honour the geology and extract maximum value? I'm highlighting the Shawkey South Dubuisson because of the style of mineralisation. Zone 134, which is close, is similar. And I just put a circle around the Pontiac sediments because we're drilling and I'm a geologist and every drill hole's a winner. Any questions on Kena? Alison.
Maybe just one, in terms maybe for both Kena and for Eagle, as you're looking at these new targets, have you done much work on metallurgy and whether some of this can be all processed together or what the different types of mills would have to be? And is that helping to decide how you find targets as well?
Yes and no. Yes and no. Yes, we are doing that work. Multi-element work, deportment studies, microscope work, even starting at an early stage, bottle rolls, leachability. You highlight straight away whether sitting 24 hours tumbling in a bottle with cyanide solution, are you getting those recoveries to mirror potential plant with material being ground to 80 microns? Traditional fire assay material. So yes, we are doing that work. Would it dictate where we do and prioritise? Not at the moment. Do the work first. Dorset, we flagged before and we know from historical work, it had some recovery issues. The work was done in the past. But it's grinding. What that work is showing is as we do finer grinding, 80 microns down to 60, down to 40, the recoveries are increasing. So we know that there's a grind challenge at Dorset Main may not be the same at Dorset West. But we're drilling, getting material, putting it through. When we get the volume and the feasibility-based work in the background, then we can help design how we treat that material. Drilling it first. Anything else?
Maybe just wondering, with the development of the Presqu'île ramp into the level 33 and the existing infrastructure there, how far off do you think mining from Dubuisson could be? Because I think like that was a big part of the fill the mill strategy, right? And then just wondering on the exploration in the areas that are kind of untested, like how much development, or do you have the infrastructure to kind of really drill that off materially, or how aggressively can you drill those areas?
Okay. So, Wayne, I think what you're asking is, with these alternative targets, how aggressive can we drill those and bring them in to offset Dubuisson? Is that correct?
No, not to offset that, like in addition.
In addition?
Like it's two separate questions.
Okay. How quickly can we drill? It comes back to how quickly I can put drill bays in. We've got no shortage of drill rigs. It comes back to sequencing underground, and certainly when the breakthrough happens on the ramp, we have options for moving waste. We can keep waste underground, we can move some waste up. The ore keeps going up the shaft. So that gives us optionality in sequencing. As to how quickly that may displace other zones to fill the mill, how quickly can we define a resource? I can't comment on that at the moment. And
Just to add, I think a little bit, Wayne, I think if you look at Dubuisson could be put into the mill. I think what Jonah is saying is that he's honouring the geology first. So he's doing his drilling correctly, and he's looking at all different ore bodies to see what's right in terms of the strategy from a value perspective. So I think it's just important to note that Dubuisson is on infrastructure. It's about 200 meters, I think, away from infrastructure.
Yep.
Tunneling out, if we were doing it that way. We haven't done any designs on it as yet, but it's not far away from infrastructure. The question is whether that's the right thing for Dubuisson, and I think that's the drilling will tell us what's the right thing to do. I think what you hear Jonah say is I have plenty of other things to do. Northwest.
Northwest, VC, B zone.
A number of other multiple ones that need to be followed up on, and that's what I love about the strategy is it's thinking about value and working on how do we transition that into the mill in the right time.
How far are we away from the bottleneck being a preemptive sinking of the shaft, where that is an ultimate bottleneck versus ounces per vertical meter higher up in the ore bucket, right? Because if you're down at Kiena Deeps 2,000 meters, that may be uneconomic relative to something that's trending east-west, closer to...
At this stage, we don't need a shaft at the bottom, right? Because you're looking more on a vertical meter enhancement and the upper sections. However, I'm hoping that he tells me to look at a shaft. So the more work he does in unlocking below that area will tell us whether or not there's an economic value proposition to do so. So at this stage, we don't need it. So how far are we with this stage? Well, we're sitting at 1.8 kilometers below. We don't have any economic case today from a trade-off perspective. That makes sense to him. That's because we still got to drill out the resource. Should the resource change, that could change the story at that stage. But I think you can see Jonah speaking about...
Go back to that cross-section, please, Liam.
Vein of your drilling logic.
Yep. No, this one's okay. So I think it's a good one to start with. So, Ralph, we're looking at this material's inferred. This material's part of our resource. Now that's in the resource. This material isn't. We were talking about footwall zone. We've got a drill press release, got some great intercepts. It now runs between about 149, 150 level down to 170 level. So it's grown. It's now 200 meters high, and it's not closed off. There's more drilling to look at above it. At the moment, our ramp's at 133 level. Footwall starts at about 150. So we got room to drill. Part of the challenge of drilling that area in the past, A, schist, but B, the development wasn't there. The 134 wasn't finished to give us the angles of intercept. So when we talked before about this is the fold, and then you've got a structure coming through, and then you've got on the hinges of the fold the footwall zone sitting out here. You drill here, it's great for this fold, but as you get to the hinge, it doesn't support. You drill at this angle for the hinge, you're drilling down the angle for the footwall zones. So that's the balancing you've got to do where you can drill. The 134 gives us good angles to intercept. The 134 development where we are now, 133, 134, we've got some remarks that we're going to do delineation drilling, our grade control to firm up the stope production in 2026, 2027, but we'll be pushing holes on and drilling deeper to test the zone that comes up from the footwall zone. That's where we can add extra ounces per vertical metre because we've got the angles to do that now. We don't have to go to these depths.
But we hope we do at one stage.
Especially when you've got good grades. Thank you. Last summary slide, walking through. We talked about before what's excited us about the project, our company, our ground. We've got great real estate. We've got good geology. Grade, fantastic grade. I mean, it's there at both our mines. Grade is king, but we're working on a strategy across 3 buckets. We're looking at 0, 12 months, 1 to 3 years. All of that is sustaining, and then we're looking at growth. We're looking at how can we sustain our high grade over the next 5 to 10 years. We're looking at new discoveries, down plunge continuation, and we're looking at open pit materials as an alternative to maximise value on what's on our ground. We've got a sustained budget now as a minimum 55 million a year for the next 3 years because we've got an aggressive drilling program to grow our resources. And that means vetting the lower part of the triangle. Extend the life of mine. Global model work fills our mills. Extra targets to drill at Kina to fill the mill. And then the upside. Ideas into grow bars. Anthea, thank you.
Thanks, Jonah, and I hope you enjoyed that because I do. Every time I listen to him speak, and every time we have our new board or anybody from the board coming on site or somebody who's an investor who's got experience, Em really gets as excited about this land and always, astounded by the quality and potential of the land that we had. This is the reason why I came to Wesdome. This is the reason why I get deeply excited about Wesdome. I think what I really wanted to talk about is literally the vision. What is the vision for Archean at Wesdome? Well, our vision really is to build this company into a mid-tier company. We have a dream to go to a 400,000-500,000 ounce production company and be able to land that's going to help us get there. Something that exists in our existing infrastructure or existing operations, where we can actually find ore bodies and they'll fill our mills, as you've heard Jonah speak about. I think it's important to say that we're not going to take away from the essence that we can keep replacing high grade, we still maintain that logic, but we're building on top of that high grade. As you can see from what he said earlier, there's multiple opportunities in underground, high grade opportunity. There's multiple opportunities, bulk scale, open pit, any of those. The sizzle at Wesdome is really just getting started. I think if you see the reasonable potential of Wesdome, hopefully you can see how we see this. We've changed this company a lot to move towards being a longer-term mining company, a 10-year vision, look ahead of ourselves, make sure we keep building the business. How do we ensure that we drive value? How do we leverage our teams and our people to drive value? Hopefully, we gave the indication of how we're planning on doing it because it's certainly very clear to us. And our team, all of us are focused on this. All of us believe in this. This is going to happen. It's just a matter of watching the process unfold. I always say to Jonah that, I know an exploration program is not a 1 year thing. And I've always known that. It's always about building foundation and growing from that foundation into this strategy. And the team has come together strongly to do just that. So hopefully the team has given you a bit of a view on how that works. June will be a bit of that example. So in June, we'll be putting out our press release as well as our our technical report, the statement itself. The technical report gives you 2P, the press release gives you the story. And I hope you're going to get a sense of why we believe and we have confidence in continuing to increase our base load at minimum, high break, and hopefully growing it, and filling our mills with other material, and seeing a regional scale opportunity that takes us to the next level, that shows us how we can take this land and build it beyond that. All of this to say that it helps us get down costs. And at Wesdome, let's got a strategy to get our costs down. So we're quite excited about all of this. I think to wrap up all the formal remarks, that's about the end of it for me. We have a little survey for all of you. Oh, what we got?
Thanks so much, Anthea. So while you're talking about the June release, can you just add a little more color on the scope of that release? Like, I think with the mine plans, you can have mine plans for both mines. Will they have costs in those mine plans too? And then also did you say this, you're going to have reserves, of course, but mine plans will be based on reserves, I imagine? Yeah. And then you have a resource update too, just to get an idea of what could expect.
What you would comment a bit as well. Yeah, sure. So it could be like a bit of a technical narrative document. So you'll see the summaries of the LOM 2Ps. Then you'll have some high-level OPEX, CAPEX guidance that you incorporate to give you visibility there. There'll be one-off analysis around various trade-off options that we're looking at. And so that should give you enough information, combined with John O's target inventory, the endowment estimates, with ranges and that are probability weighted. That should give you enough data to be able to update the flows in a credible way. Okay, thanks.
After the release, we'll also be doing a site visit. I think it's always nice to see it in real life. It really gives the good view and it can take you down to the operation. So Trish will be sorting all of that after for all of you to get you to go and visit.
Is it both mines or just one mine?
No, both mines. Okay. So we'll be doing that. So unless you have any other questions, I would ask you please to fill out your little survey form that we put there too. We'd just like to get a sense from you whether this was helpful to all of you, if you learned anything from this. If there's any questions, we're all here to answer them. Good. Thank you so much. Thank you, everybody.